Okay. So welcome to ProJack's webinar. Okay, this is a weekly so-called our forecast or weekly thoughts on the futures and the FX market. Okay, and today is 2017 February 13th, and tomorrow is Valentine's Day, right? So just a good flash for all of you guys. All right. So I hope that you have a very smooth love and very good partners or life partners, right? And don't forget, use some money that you earn from the trading. Treat her a lunch or treat her a meal, right? Yeah, make your life more fulfillment. Right? Okay. All right, let's get back to the market. Okay, first let's look at the DXY. And last week we just analyzed that the DXY have a very nice support on the gap, right? So you guys remember that? This is a very nice gap, and the gap shows a very good support here, 99.20 level. Okay, and since then the DXY made a very nice rally. Okay, this is a good rally, and so far it's still in the uptrend channel. Can you see it? Can we say that the DXY has already been in the uptrend channel? No longer being the old, the downtrend channel. It's already broken the channel. It's broken the channel and changed the direction, formed another uptrend channel, right? So our idea is still, buy the low. Okay, hold your longs of DXY, hold your long of dollar, and now it's already 191. Okay, so my question is, guys, where will the DXY has towards? Do you have an idea? And where shall we expect the DXY to rally to? What kind of instruments, what kind of tools can we use for us to get a very good place for our long position to take profit? Do you have any idea? Yeah, just tell me. Okay, 618, yeah, that's of course is very good tools, right? The 618 level, okay, which will be the 102.07, and that is a very possible target for DXY rally. Okay, and what else? What else? Yes, structure on the structures, right? We look at the structures. Okay, so for me, I'm thinking about this structure. Okay, of course, the 618 level have very good structure as well. It's here. Okay, but however, we already identified the 102.07 level. Okay, that is you just mark this level as your expectation for the DXY move. Okay, and it goes up to here. But the most very important DXY, the resistance structure is about 102.50. Okay, just look at here. This is a multiple top, right? This is a neckline. Okay, the neckline being violated once. Okay, pull back, have a shooting long pin bar here, shooting star kind of. Okay, and then just crash. Okay, and pulls back once, pulls back twice, and cannot maintain above this 102.50, and the DXY goes into a very bearish channel. So my suggestion is you can hold the DXY to 102, and also when DXY goes to 102.53, you should actually take most of your profit. Okay, that is a very hard level for DXY to to go above. Okay, and look at it here. Look at it here. This is a candle that tells you that a huge selling force comes in at January 11th, right? Yeah, January 12th. Okay, this is a engulfing candle. Okay, so the DXY, the most important part, most important structure, you still look at here. Okay, so being said that I'm still bullish on the DXY, I'm thinking if it goes up here. Okay, however, it may still just running a channel. It may not go above straight away, but it will actually comes down a bit, then just have another kind of okay, impulse wave, right? Just keeps doing like this. Okay, so pay attention to 102 and 102.50. Okay, and right now we are still bullish on the DXY because it breaks the downtrend channel, forming a new uptrend channel. And for the daily chart, it is very high likely for the DXY to go back to the original place, right? And go to daily chart, we have another, we can see more clear because here we have a very good pin bar here, okay? So all this telling us the DXY may goes to here and then have another kind of a correction move, maybe. All right, so are we clear for DXY? Yeah, are we clear? Good. Okay, let's talk about the gold. Okay, the gold is always the first product we talk about. Okay, so last week the gold goes into the weeklies. Okay, we mentioned that the gold actually is testing the weeklies structure. Okay, here weekly structure, right? Now put here. Okay, from 1 to 41 to 1 to 50. 49. Okay, the gold is testing the weekly's neckline. Okay, and let's go into daily chart and find what actually opportunities we have. Okay, you see the very clear the gold. Okay, because it breaks the previous high, the 1220. Okay, and that's a place that we don't want to short anymore because it breaks new high. And indeed, in my webinars for my Chinese students, I actually tell them to buy at 1 to 37 in a 5-minute charts. The last rally is here. Okay, because we can see here there's a structure being violated 1 to 35. Okay, it goes up and retested. So that is a place if we using the same methods, structure breakouts and pullback trade. Okay, that is a place that you can have a good buy at 1 to 34 or 1 to 35, and there you can have a good profit at 1 to 44. Okay, and then the gold actually have a very nice shorting opportunities last Friday. Okay, last Friday is here. Okay, when I say if we use the 618 level, okay, and we use the structure here, okay, 1 to 41.33 is a very good place to short. Okay, and straight away up the short, it actually the gold give you a $10. No, sorry, not more than $10, right? It's 1 to 41, all the way to 1 to 21. That is a $20, which is 200 pips profit. Okay, if you short one lot, you earn $2,000. Okay, that is very, very good trade. Okay, this is, you can see this is a 2618 trade, or you can just a 618 structure play. All right, so just tell me, anyone short gold at 1 to 41 last week, last Friday? Who did it? I hope you guys did it, right? You did it. Okay, good. Me, all right, good, secure. All right, that's very nice short, and you can take profit at the multiple plays. You can take some profit at 1 to 31, take some profit at the previous structure here, 1 to 25. Okay, all right. Take profit, and then after you take profit, the price shoots back and looks here. Where does the price push back into? Pulls back into the same place, and it breaks out the structure, right? 1 to 36.54. Okay, the gold forms another, neckline here. It just breaks out, pulls back into the same level, and you can short again. And now you have another $12 in profit, right? Short from 1 to 37, and now it's 1 to 25, and that is very also another kind of a profit you have, right? 618 again. Yes, you're right. Okay, so we can see that okay, the market always have the trading opportunities. Just you need to wait patient, and you need to have a very good eyes, and you need to be trained. You need to be trained to find those opportunities. Okay, and what you can do right now? Of course, you can take some profit, right? Can we? If you short at 1 to 36 or 1 to 41, can we take some profit here? Yes, of course you have 100 pips move, right? And another important reason is it actually gold already break the previous 1 hour channel. Okay, it breaks the channel, retested, okay, 618 level, retested. So I believe now the gold will be a sideways market, right? What I mean sideways markets is we have a very, very nice drop from 618 level, but right now, did the gold break the new low? Guys, did the gold break the new low or not? Has it broken already? No, right? It's still in the so-called, we have a higher lows, right? Higher lows, but lower highs. Okay. And what we can expect from this? Okay, we can expect, yeah, the gold right now is in the sideways markets. Okay, the low is 1 to 21, the high is at 1 to 35. So within this range, within these sideways markets, what you can do? You want to buy low and sell high, right? Do you want to buy low or sell high? And in this case, my suggestion is, since the gold is already in the weekly structure, right? In the weekly structure, you should actually focus on sell high. Shall we focus on sell high? It have a, you know, the market will goes up, goes down, goes up, goes down, and finally we will break out, or finally we break out. And this is how we trade the sideways, the ranging markets, right? Guys, can you still see my video? Is everything okay? Okay. Okay, that's good. So right now we can say that after finish the uptrend move, the gold is now having a, you know, we don't have any higher highs. We also don't have any lower lows. We have, you know, the highs that not be broken, the lows that not be broken as well. So what you can do is, you know, that is a ranging market. You can always buy low or sell high. But in this case, I will focus on sell high because I know that sell high may give me better returns, right? The downside move is much bigger than upside move, right? Because we know that weekly chart 1 to 41 to 1 to 48, that is a very huge resistance area in the weekly chart. So in the 1 hour chart, we only want to find a place to short. Okay, of course 1 to 35, 1 to 37, that is a very good place to short. All right. So if you miss the short opportunities here, you can always wait for the pullback to short it again. Okay. Also, you can also wait for the, you know, if the price give you this Cardi pattern, okay, this Cardi pattern will work, okay, just like Aussie dollar. Cardi pattern give you 1 to 40, okay, and also you can use the 618 level as well, okay. So you can create your selling orders multiple times at 1 to 35 or 1 to 39 or 1 to 41, okay. You can just create a 0.1 lot, 0.1 lot, or another 0.1 lot, okay. So you can separate your selling orders into 3 different places, and then you have an average price to it at 1 to 39, okay, and that is a very good place for you to keep the gold short at. Maybe the gold will drop to 1181, who knows, right? Anyone believe that? Will the gold have these possibilities that we drop to 1180? Can or not? It's very possible, right? Because yeah, it looks like there's a bullish back, if there is, right? So it's very possible for the gold to come back all the way to 1182 or 1181. Okay, and if you have a short at 1 to 35, right, that's very huge profit. Okay. So remember the goal, we want to focus on selling high. Okay, we can focus on, you can sell at a 0.618 level, or you can sell at the Gardy pattern, or you can sell maybe, right, you can sell the breakout. Okay, sell the breakout and pull back. Okay, if it breaks out 1 to 21, pulls back, and that is another short. Okay. Do you prefer to trade a CD lag? No, I don't prefer to trade a CD lag. Yeah, because harmonic patterns have higher possibility that it will make you a profitable trade if you trade after D. But the CD lag may not be completed at all. Okay. The CD, because for example, now we have a Gardy pattern, potential Gardy pattern. It only tells you that when the gold comes back to 1 to 41, because you want to buy low and sell high, right? Yeah, you sell high, no problem. Okay. However, it doesn't really tell you that confirm the gold will rally from 1 to 24 to 1 to 39. Okay, if you buy here, because this is in a high location and the trend is going down, and if you want to buy, that's quite risky, right? So I don't really prefer to trade the CD lag unless unless in the C point you see another harmonic pattern. For example here, okay, you see another harmonic pattern and you want to trade this CD lag. That's okay, because you are trading the D lag. You are trading after the D point up for another patterns, right? And you can take your profit to another D point. That's okay. This we call patterns combination. Okay, if you remember in our course, we teach that, right? So you need to have very good, solid reason for you to trade the CD level. Is when you have to find in the C point whether it forms another harmonic pattern or not. Okay. All right, so that's the view for the gold. Okay, so wait for the pullback to 1-235 or 1-240, 139 to short. Okay, I believe the gold have very, very good, decent move. Okay. Okay, let's look at the oil. Okay, the oil has a very strong rally it actually have a very nice drop. Okay, first, okay, the oil, we have a short from 54, okay, or 53.80. That is the level we want to short, right? And have a very nice swing of almost 300 pips. Okay, if you look at here, the oil we have were, so-called Gardy patterns, right? Yeah, and that's gave us a very good returns at 54.23. Okay, and goes to 51.23. That is 300 pips move. Okay, so take some profit here, rest, break even, all right, and then the price just rally back again. Okay, and look here. What I say, the oil is actually retesting the structure. Is retesting this structure or this wedge. Okay, kind of breaks down, retested, and it really goes into, but however it drops again, right? So what I feel is the oil, if the oil cannot break 54 level, that is the end of the rally. Okay, this structure is very important. It pulls back, cannot make high, and comes down all the way. Okay, so it already for the oil is already broken the long-term trend line. Okay, it's just broken the long-term trend line. So I'm bearish on the oil. Okay, and I believe that 54 is a very crucial level for the oil. So if the oil cannot really close above 54, that's a place that you want to hold your shorts, find your shorts. Okay, yeah, you can stop out and break even and rally. That's okay, and you can enter the new trade. You can choose to enter the new trade if you find another, another trading opportunities for the oil. Okay, for example, you go to the 1 hour chart. Do we have an opportunity to short oil today? Let's find it. Okay, so let's switch to the 1 hour chart. Okay, look here. Okay, strong move, strong rally, right? Strong rally, pulls back, another rally. Okay, and then the price just consolidates above 53.73, right? The price comes down, have support, right? We have a lot of support. The price just reluctant to goes down, okay, until this red candle, right? And this red candle moves the price to the previous structure here, and then it pulls back at this candle. So that is a level you want to short again, 53.70, right? Jonathan, do you agree? Right? So you can always find some new opportunities to find, as long as your trading logic or your trading ideas are consistent. So every time you are trading this breakout and pullback trade, okay, every time you're trading, that is okay, because you will have a very good win, right? If you are right, and you will have a small stop loss, okay, right? And if we combine the structure together, look left. Do we have a good structure for us to short oil? Yeah, it has, right? Look here. Just focus on this structure, okay? Because we have a support. This candle have support comes down the support and retest, being support becomes resistance, right? So this level are still making sense in the left structure, okay? So it tells you that, okay, the oil cannot make high. And then this strong move away, comes the red candle tells you that, yeah, the 53.70 is become the latest, resistance, right? And guys, I want you guys to focus on this level as well, 52.90, okay? This level, because this level is the origin of this bullish move, right? And this is the time that we have some news from the OPEC, right? They have cut some, the output and make their, kind of telling the people that yeah, we are slowing down for the inventory, right? We don't want to produce, yeah. Okay, so yeah, tomorrow have another OPEC meeting, right? So let's just focus on 52.90. Okay, what if the price breaks through the 52.90? What if the price comes down all the way, breaks the origin of the move? What you can do? You can wait for a pullback to short it again, right? Because this is a level that tells you, yeah, okay, people feeding the oil will go up. However, the sellers just, moves it all the way, okay? They really attract a lot of new sellers comes in to sell at a very good price, okay? And if the 52.90 is broken, that is confirm of the bearish of the oil starts. Okay, so tomorrow you can check the time that when the meeting will start and just look patiently at the 52.90 level. This is a very important support. If the oil broken this support, we can focus on short the rally. Okay. And right now, what you can do? Right now, you don't want to sell at this low, okay, because it's approaching the previous support, and you don't want to buy because I don't know tomorrow what will happen for the meetings, right? You can wait for the meeting, see the price action after the meeting, okay? If it ever gives the 620 retracement, that's a good place to short again, okay? Or maybe you can see the candles, okay? Do we have a long pin bar or do we have an engulfing candle? Okay, so just, but the key support and the key resistance will be here. Okay, so you will know that, and what kind of circumstance you need to be bullish. Okay, for example, if the price breaks through 53.70, pulls back, okay, you want to be bullish. If it breaks down of 52.90, you want to be bearish. Okay, then that's how we actually identify or how we trade the news. Okay, the news is a catalyst to push the price, move to one direction. Okay, but the price will have some reaction at the important or we call critical price level. So you just wait for the price action or at this critical price level to see whether the support still being support or support being broken or violated. Okay, if any violation is forming, okay, we see a trending market. Okay, so this is a very important idea. Okay, guys. Okay, here. So let me just put into conclusion, right? So guys, tell me, if nothing happens, if there's totally no news, no fundamental change, what will the price move? Yes? If there's no fundamental change at all, and this product is, is so, yeah, is so popular, and people, okay, for example, KFC or McDonald's, right? Right. So McDonald's always have this, kind of their value packet at maybe in Singapore we call maybe you go buy the cheeseburger, right? Cheeseburger meal is always $6, right? Yes, if there's no fundamental change, the price will just maintain sideways. Okay, and only when the what fundamental comes out, then the price will have breakout or maybe breakout. Correct? So the fundamental drives the price out of from one range to another range, right? Do you agree? It's always after the fundamental news, then the price actually give you the the fundamental reason. Yeah, now I see why the oil is above 54, or yeah, now I see why the oil comes down, break through 52.90 because the OPEC have a blah 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 blah, right? Because of the the EIA inventory has blah 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 blah, right? So those sideways, those fundamental news will actually drive the market to try to create a new price range. So if there is a support that is being violated or there is a resistance being violated, what you can do, guys? What you can do? you see the price comes into the resistance. If cannot break through, you can sell. If already break through, you wait for a pullback to buy, right? If so you can choose many different ways to play it, but the important thing is you need to check whether the critical price level, this critical price structure, that it is being supported or not being supported. Okay, so just focus on this strategy. It's always working. It's always working. Okay, no matter what kind of news. Sometimes the market moves opposite for the news of the news. The news is very, very bullish for the oil, but the oil just crashed, right? Do you have this kind of experience? Sometimes the USA's non-farm payroll is very, very good, but the DXY just dropped, right? The gold is just ready. Sometimes the news, is correct in the positive correlation. The news is good. The price moves after the news, same direction, right? So how we actually identify what kind of trade we want to take is after the news, you check whether some critical structure are being valid or hold. If hold, you can just place an opposite trade. If being valid, you find the pullback to follow the trend. Okay, very easy. Get it? Okay, I hope you guys really master this kind of strategy that I teach in my course. Okay, it happens every time. Okay, so most important part is you need to identify those important structure for the price to react with. Okay. All right, let's look at the euro. Okay. Last Monday, I actually shot the euro at 1.0780. Who still with me? Who are shorting the euro from here, from the 618 level? Raise your hand. I shot from here, and I say the first target, and that is second target, right? Two targets, both target hit, and win 150 pips, right? And right now, we can say that the euro has already changed the direction, totally changed the direction, right? So have much more downside moves. Just hold your shots, right? Okay, congratulations for those who short euro. Okay, hold your shots because you have more downside move. All right, we can see continuously we have lower highs, lower lows, right? So it's in the downtrend channel, and all the 4-hour charts or daily charts, all the trend line support is violated. Okay, and the euro has broken this important structure as well. 1.0650 support broken, retested. Looks like it's going to break down. Okay, so if the euro ever comes to 1.0350, you don't be very surprised. So just hold your short. However, you can take some profit at 0.618 level. That's okay. At 1.05, take some profit. That's good. Okay. How low? Yeah, it will test 1.0527, and it may also test the previous low 1.04 or 1.0350. Okay. That's very likely to be because we have a we have a downtrend move, correction, another downtrend. And then this is an uptrend, is a kind of a correction. After the correction, it goes into the main force of the the downside move. Okay, so the impulsive wave, or we say that the major trend will resume. Okay, this correction end, so the downtrend will just resume as it always, because the fundamentals, the euro is weak. The euro is doing QE, but the dollar is hiking rate. Okay, so this driving force will make the euro to goes down to 1.04 or maybe even 1.0. Okay, the fair value. Okay, so just hold your shots. Okay, look at the sterling. All right, sterling have a good rally from 1.2350 level, and right now sterling is kind of sideways, right? We have lower highs and we have higher lows. Okay, so sterling, just don't trade it. Okay, don't trade it unless it actually breaks out. Okay, breaks out or breaks down. Okay, but you need to focus on the level. Okay, to be bullish for the studying, the price must be maintained above 1.2580. To be bearish, the price may need to be maintained lower than 1.2440. Okay, so wait for the breakout. Okay, wait for the breakout, and you want to trade. However, in my view, the sterling will have a very good place to buy at 1.2261. That is a very juicy entry level for the sterling. Okay, look left, we have very good support structure, and this 0.618 level will give you a very good entry for long. Okay, let's look at the dollar yen. Anyone bought dollar yen? I think in my previous webinar, we see that the dollar yen have a very good support at this level, right? This is a U shape. This is a U shape bottom neckline here. Okay, we have a U shape bottom. Okay, and the neckline is being violated and goes down, pulls back. 111.50, 111.60. That's a very good place to long. Okay, and now it's 113.80, and the dollar yen has already broken the downtrend resistance line. Okay, so dollar yen we bought at 111.60. Okay, and now it's 113.80. It's almost 200 pips move. Okay, you just hold it. Just hold your dollar yen long. Okay, but don't short. Don't short. You focus on buy. Focus on dropping and buying. Okay, and I feel that the price may give you a 618 level for you to buy again, 112.56. Same as the previous neckline here. So if the price ever comes into 112.56, you can buy it. Okay, and just wait for a rally. Okay, wait for a rally. Okay, so yeah, Junior Ho, don't ask this kind of question. Please talk about dollar yen. I'm already talking, right? I will talk all the pairs, all the G7 pairs. Okay, you don't need to ask me to talk about dollar yen. Yeah, we will go through it. We will just go through it. Just be patient, okay? Because this is a webinar that I'm the host. Okay? I have my sequence of talking about all things. Okay. So guys, remember the dollar yen 112.569. That is a level for you to buy. Okay. It's broken the channel, retesting the 618, and that's a good place to buy. Okay, and you can have your target the 115.30 or 116.58. I will choose this one as the profit taking point. All right. Any questions? Any questions for the dollar yen? No question. We just pass to the next pair. Yeah. Echo. Have any questions? Okay, let's move. Let's move to the Aussie dollar. Okay, the Aussie dollar have a Gardy pattern from the last week. Okay, and I published in a group. So the Aussie, we have a nice short in the last week. Okay, we short from 0.607680. We short at here. This is the first time we short. The second time we short, and then Friday we have another time to short. Okay, it just tells me that the Aussie cannot, breaks new high, and this Gardy pattern will give me a very nice profit. Okay, so just keep shorting the rally of the Aussie. 0.7680 is the best level for you guys to short. Okay, and once the Aussie breaks the triangle, you have more room to going down. Okay, it's really frustrating, right? I understand, totally understand. Okay, but just look at the profit that you earn. Okay, the problem is the Aussie have a very strong rally here. Okay, it breaks the high of 0.76. 0.76. So this is the place that you need to take profit. Okay, short from here, take profit here. You don't want to buy. Okay? I don't want to buy, but I want to short at the high, short the high, short the high. Okay, so actually it gave me 3 times of shorting opportunities. I win 80 pips, 70 pips, another 80 pips. Okay, at some position, that's okay. All right. Yeah. Sometimes it just pulls back again, but don't worry because still that we have every time we have a very decent trading opportunities, right? Look here. The first time we short, we have almost 1 to that is a 1 to 4. Okay. Yeah, 1 to 5 risk reward ratio, right? The second time we short that is slightly lower risk reward ratio, but it still gives me 1.124 risk reward ratio. And then last Friday, if you short at 0.7680 again, right, and stop loss above 0.77, and right now it's already 1 to 2. Okay, if you hold to 0.76, 1 to 4. If it goes down even more, you have a very nice risk reward ratio. So that's how I choose to short the Aussie every time when I see it ready, because I always have very tight stop loss of 0.77, maybe 0.5. That is my stop loss. Okay. However, if the price cannot break my stop loss, cannot take my stop loss, we just have a 1 to 4, 1 to 3, or 1 to 5 risk reward ratio. Okay. Don't be frustrated. Okay. If sometimes you are wrong or you are stop out for once or for twice, you can take a rest and see other symbols or see other currencies. You don't trap with only one currencies. Okay. All right, Jonathan. So yeah, and also even if you're stop out and you never find the opportunity to jump the trade again, but don't worry, trust me, you have another opportunities waiting for you. Okay. For example, now, okay, people who don't short at 0.7680, what you can do is you can wait for the price to pull back to 0.7660, right? Look for the price level to short, right? You can wait for the structure to short the pullback. Okay, the pullback trade will give you some profit. You ask people for which one better we take the line right to left or left to right. Okay, very easy, very easy. Fibonacci level is for you to always to follow the timeline. Okay, follow the timeline, right? Because the market always goes to the right. Market always goes right. So whenever you draw Fibonacci level, you must draw from left to right. From left to right. Okay. From left to right, okay? If you want to draw the Fibonacci level here, or you want to draw another, a Fibonacci level here, just from left to right, okay? Unless you are actually doing some research for the inverse Fibonacci, then you draw from right to left, okay? And from right to left, you're actually doing the Fibonacci extension, not retracement. Okay, you are doing an extension here, see? Okay. That's some basic tips for the Fibonacci you use. Okay, if you want to learn more, you can join my course, because in my course I will teach you everything about Fibonacci. Okay, I will teach you how to use the Fibonacci retracement, how to draw Fibonacci extensions, okay, and how to do both combinations. Okay, yeah, and don't forget that Aussie have a very good Gardy pattern here. Okay, so this is also another shorting opportunities for us to short the Aussie. Okay. That is very good. All right, let's go to the, what else? Okay, the Kiwi. The Kiwi dollars, we have a very nice short last Thursday, right? The Kiwi, wow, that's very nice profit from 7300, now it's 7170, almost 130 pips, okay? And look at the 1 hour chart. If you wake up early enough, okay, I'm talking about for those Asian people, all right, because New Zealand is is very hard for me to that is GMT, it's actually 4 a.m. in the morning if I live in Singapore, right? 4 a.m. That's very very early. Okay, but if you wake up early enough, you can find these opportunities to short the pullback at 0.7280. That is a pullback you want to short. Okay, and then just crashes. Okay, so just hold on your short for the Kiwi. You have much more downside move. Okay, it will goes to 0.69. Okay, a lot of I believe that you will have a good chance for you to take very good profit for a short. Okay, we stock sterling Aussie. Okay, sure. target, yeah, just look left for the structure. You don't ask me for the target because you're already winning money, right? If you have a profit, you don't ask me the target, because if I tell you to take profit here and then the price just keeps having more target, you hate me. So say, yeah, no, Jack, you just let me to take my trade too early, right? You hate me, even that is a profitable trade. Okay, so I don't want to do that. Okay, so you can just use the structure to help you to find some good place to take your profit. Okay, yeah, you must learn how to set your profit, how to set your target. Okay, I already teach you guys about this. Okay, look left. All right, okay, starting Aussie, very nice support at 1.26. Okay, we can see here, this is a kind of a Libra pattern. Okay, so just focus on buy of the sterling Aussie, will give you a very good return. Okay, if it breaks out the 1.65, it give you to 1.67. Okay, so look for the breakout at this 1.65. Okay, and you can see here the price goes back to testing the previous structure. Yeah, have another very good rally. Okay, so sterling Aussie, I'm bullish. Same for the sterling Canada. Okay, sterling Canada bullish. Is confirmed is bullish because this is a V-shaped reversal. Okay, typically after V-shaped reversal, the price will forms a kind of a flat. Okay, because this strong rally just scared all of the sellers. Okay, and the price comes down, but new buyers comes in, we have buyers. Okay, and if the price breaks the flag, you have more upside room, right? Okay, lastly, let's look at the S&P 500. Okay, S&P 500, we have short in last week here. Okay, 2295. It earned some profits, right? Okay, small profits, and it breaks out and hit the stop loss break even, and then the price just keep rallying, right? And after it breaks 2,300, there's no more shorting reason for you because it just breaks all-time high. Okay, I won't touch about the Aussie Canada. Okay, I won't touch about the cross pairs in my webinar because the time really is not enough. Okay, it's 20 plus cross pairs, so don't ask me the cross pairs. All right, I don't have enough time. Okay, this is a free webinar. Okay, so I talk about the Aussie dollar, I talk about the dollar CAD, and you just combine them together and to make this analysis of the Aussie CAD or maybe the sterling yen. Okay, all right, don't trade cross pairs. Why you trade cross pairs? If the cross pair moves really slow or not at very good level. Okay, you trade Aussie dollar or dollar CAD, better, more straightforward, right? Okay, so after the S&P breaks up 2,300, we don't have any reason to short, so just watch for the pullback to buy. That's the one thing. Another thing is I'm waiting for the price to be overshooted and then have a 2618 trade for me to short. How I identify overshooted? Okay, so I can use the Fibonacci inverse extensions. Okay, so this is the level that I'm looking for, 2326.7. Okay, waiting for the price to go to 23267 and waiting for the price to form a double top, pulling back and short. Okay, so that is how you trade. When the price goes into the 1.618 level. Yep. Good. Got it. So you can use Fibonacci levels, 1.618 inverse extension, or you can use another swing. Okay, it's up to you which swing you want to use. Okay, but for me, I will prefer the swing of this one as well. Okay, because this is very good swing. Okay, tells you it may further goes to 1333.4. That is also possible because this 1.618 level. Because looks previously, you can see here that is a swing. It goes into 1.414 extension. So now it's already 1.414 extension. It's kind of a triple three drive. Okay, one drive, second drive, third drive. Okay, looks kind of, you know, 3 drive. Okay, but I'm going to wait for the 2.3 to 6.7. All right. What's that? What's this link for? Your chart or what? Okay, es.tradingview. Okay. Aussie Canada. Okay. So what's your conclusion? You want to short? Do you want to short? 618 level? Okay. Well, I have no comment for this cross pair because I seldom trade Aussie Canada. It's just the moves too slow, and also the pips value is very low. Okay, you need to understand the pips value, guys. Okay, because for the Aussie Canada, you are earning you know, 10 Canadian dollar. You are earning 10 Canadian dollar per lot per pips move. Okay, and 10 Canadian dollar you need to divide by 1.31. Okay, so you just earn maybe $7.5 per lot. Okay, I don't really like the trade, and you can see here the Aussie Canada. Okay, if there's nothing, if the price will just move very slow. Okay, will never have a very huge drop. Okay, and if something happens to the Aussie or something happens to the Canada. Okay, right now it's just, you know, in the range, still in the range, in this range. Okay, so I won't suggest you to short Aussie Canada, but I really strong suggest you short Aussie dollar. Okay, because sometimes when the Aussie goes down, Canada goes up, or Canada also goes down, so you have sideways. Okay, for example, I just compare. Okay, let's just compare. Do a very simple comparison. Okay, I compare Aussie dollar and Canadian USD. Okay. And you will see that how these charts are affecting each other. Okay, it's very easy for you to see that, and you know that because of the kind of correlation. Okay, because okay, see, when the Aussie goes down, Canada USD also goes down, right? Do you agree? Do you see that? Right, Aussie goes from 0.75 to 0.71, 400 pips. Canada USD from 0.76 to 0.73, okay, 300 pips. If you trade both, you short Aussie dollar and you short Canada USD, which means you buy the dollar cap. You have this is 300 pips, okay, and this one, okay, 75 to 71, okay, yeah, you have 350 pips move in Aussie single pair and have 200 pips move in Canada USD. Okay, and you have totally have 550 pips move, right? However, if you short Aussie Canada, okay, you only have 0.98 to 0.96, 30. You just have 170 moves pips. Okay, and now you tell me, do you really want to prefer to short? I mean, to trade this pair, or you want to trade the separate pairs? Right? This one you're earning Canadian dollar. This one you're earning dollar. This one also you're earning dollar. Right? If I trade both, I short Aussie and I buy dollar CAD, I have 550 pips dollar. Okay. However, if I trade Aussie Canada, because you know why? Because if you're short Aussie Canada, you are shorting Aussie and yet you're buying the Canada USD. So your buying Canada dollar will actually give you a loss. So that actually gives you, 350 minus 200 and 150. That is, you need to minus. Okay, one is plus, one is minus. So which one you choose? All right. So I won't suggest you guys to really do the cross pairs unless it gives you a very, very extreme level. For example, here or here. Okay, you want to have a trending. You have a very extreme, high or extreme low position for you to hold a very long swing, and then you're doing some cross pairs. Okay, or if you have some fundamental or physical need. For example, you are a Canadian nationality people, okay, and you work in Australia, and every month you need to transfer your Aussie dollar, Aussie based salary into the Canadian and TT it back to the Canadian, to the Canada. Okay, you have some physical needs, and then you just trade these cross pairs. Otherwise, don't trade on the cross pairs. Okay. Okay. So and for the sterling yen is moving fast. Okay, so this is a pair that I like to trade, and the sterling yen, just pay attention to this level. Okay, as long as the sterling yen is above 138, okay, you have a potential rally for the sterling yen. However, right now it's in a kind of a sideways, right, or maybe triangle. So you can wait for the pull breakout of triangle, pulls back and buy. Okay, and the sterling yen right now is actually more affected by the dollar yen. The dollar yen goes up, sterling drops a little. That's okay, but sterling yen still goes up. Okay, but from technical views, this is the neckline 138. Okay, look at here. Look at the gap. The gap was closed, right? The gap was closed. Okay, it gaps down and closed the gap. So this is novice gap. A novice gap that is being filled, change the direction, right? And it pulls back again to the gap. Still have ready. So you can still buy the sterling yen, buy the low. Okay, is that a potential harmonic? No, I don't think so. Or maybe you want to short the, I don't know, maybe a Gardy pattern, maybe there is, but I won't trade this pair because I won't trade this harmonic pattern because I know that in the location wise, the sterling yen is in a very, very low location. Okay, I only want to short with the sterling yen goes back to 175 or 180. Okay, in low location, I want to buy the low. Okay, if the trend is up, I want to buy the low because if it goes up to 163 or 176. Okay. Yeah. 124, 124, B, 148 is C. What X at 124? B 148, C 136. Okay. Yes, you may consider this bad pattern, but however, I don't think it may complete. Okay, but if it really completes, you can buy, of course, no problem, right? You can buy the bad pattern. You have a set buying order that is good because you are buying the low. Okay, you are buying the low. Okay, so you can just have a buying orders at 129 or 130. Okay, based on the bad pattern, you can wait. But however, from my feeling is it has already complete the V-shaped rally. Okay, goes back, comes down. Now it's actually in the consolidation. Okay, kind of in consolidation. So it may breaks and just rally. Okay, it may not give you another chance to buy the low, but however, you can wait for the buy the low. Rather, yeah, I agree with you. You can always wait for buy a low. That is a good opportunities. And watch for the neckline here, 128.57. Who knows, the yen will have a crazy move and just let your order to be filled, and then you just straight away make money, right? Yeah, you can be more cautious. Yeah, that's good. And another way that you want to be cautious is you can actually consider to reduce your positions. Okay, don't trade too much positions. Have 0.1 lot or maybe 0.01 lot. If you are trading this kind of a sterling yen, this kind of a very fast moving pairs, the pips value, the pips just running too fast. Okay, the volatility is too big. Okay, just reduce your positions. All right. Okay. So yeah, it's almost 1 hour. So the last thing I may cover is the natural gas. Okay, the natural gas we have very nice short from 3.45, right? At this level. Okay, and now it's 2.97, and it already goes into the previous support area. So take some profit of your shorting. Okay, take some profit of your shorting positions. All right, and get ready for the buy if the price really goes to 2.5, because that is a very good place to buy. This is a very nice support area. Okay, and right now I don't see any new trading ideas because it drops a lot, testing the previous low, make ready back. Okay, so but you can just still hold your shorts from 3.4. All right. Okay, yeah, let's finish the S&P 500. Okay, so S&P 500, I'm waiting for the 2326 to be completed. Okay, wait for the price to go into level. Find some topping patterns 2618 or structured trade to short the S&P. Okay, you can also combine the trend line here. Okay, may give you some kind of clue. Okay, it's generally still in the trend, in the uptrend. Okay, uptrend breaks new high, don't short. Okay, but uptrend goes into a exhausted level. Former 2618 trade you can short. Okay, just look here. Last time we short, yeah, you can use the structure. The structure comes in form structure, goes in back in short. You have some profits. Sometimes your profits will be big. Okay. All right. Okay. So let's end of these conversations, and I really appreciate that your participations. Okay, and I hope that with my help, you are more clear with the markets as for now. Okay, because we covered a lot of the pairs and also the futures. So trade with your logic. Okay, plan your trade, trade your plan. All right. Yeah, and you can invite your friends to join my webinar, to join my YouTube channel, to just watch my YouTube channel as well, because I will upload the YouTube videos to the, yeah, I will upload the recording to YouTube. Okay, just tell them to join the YouTube. Okay, and try to join the live session so that they can ask questions. Right. All right. Okay. Yeah, that's all for today. Welcome. So yeah, the what I'm trying to do is to give some clue or give some directions or guidance for you guys, okay? Because there are too many people are trading with nonsense or trading without any reason. Okay, I'm glad that my students take my course and they start to learn to think independently, to become an independent profitable trader, okay, after taking my course. So that is the core value that Jack brings to you. I want to train you guys to become an independent, okay, with enough weapons to trade, okay, a lot of patterns for you to trade, a lot of trading logics, okay, to enhance your trading skills, okay, and finally to become an independent, profitable trader, professional trader, right? Okay, that's all for today. Thank you. Bye bye.